you close your eyes and picture the Yakuza, what do you see? Tattoos, missing fingers, and violence in the rain-slicked alleys of Tokyo? It's a cinematic image. But what if I told you their deadliest weapon wasn't a katana, but a balance sheet? Welcome to the dark side of the Japanese economic miracle, a time when the mafia didn't just survive modernization, they hijacked the entire financial system. They realized that extorting shopkeepers was chump change. The real money was in the boardrooms. This is the story of the economic Yakuza, men who traded baseball bats for Armani suits and forced the biggest banks in the world to become their partners. They mastered the art of Sokaiya, corporate blackmail so sophisticated, it turned shareholder meetings into a theater of terror. They inflated a bubble so large that when it finally popped, it didn't just crash a market, it broke a nation. From fake real estate deals to rigging the Tokyo Stock Exchange, we are opening the playbook on how organized crime merged with high finance. So stick with me, because what you are about to discover proves that the line between a criminal mastermind and a CEO is thinner than you think. This is the Yakuza's Wall Street Playbook. Let's begin.
When you close your eyes and picture the Yakuza, what is the first image that burns into your mind? Do you see the full-body tattoos hidden under traditional robes? Do you picture the missing pinky fingers, the rituals of atonement, or the flash of a katana in a rain-slicked Tokyo alley? It's a cinematic image, one that Hollywood and pop culture have sold us for decades. But let me ask you a provocative question. What if the most dangerous weapon the Japanese mafia ever wielded wasn't a sword or a gun, but a balance sheet? Welcome to the dark side of the Japanese economic miracle. Today we aren't talking about street brawls or turf wars over gambling dens. We are diving into a much more sophisticated, terrifyingly efficient beast. We are exploring how one of the world's most notorious criminal organizations didn't just survive the modernization of the global economy, they hijacked it. To understand this, we have to look at the landscape of post-war Japan. It was an era of unprecedented growth, a financial Wild West where the economy wasn't just growing, it was exploding. By the time we hit the bubble era of the 1980s, Tokyo was awash in so much cash that the ground beneath the Imperial Palace was rumored to be worth more than the entire state of California. It was a time of excess, of corporate invincibility, and blinding greed. You might be asking yourself, how does a feudal criminal organization fit into a world of high-speed trading and corporate mergers? Well, that is exactly where the genius and the horror of the economic Yakuza comes into play. You see, the smartest bosses in the underworld looked at the gleaming skyscrapers of Tokyo's financial district and had a revelation. They realized that extorting local shopkeepers for protection money was chump change. It was high-risk, low-reward labor. Why fight for pennies on the street when there were billions being moved in the boardrooms? This was the moment of evolution, the transition from the physical to the fiscal. The thugs traded their baseball bats for Armani suits. They swapped their punch perms for clean-cut executive hairstyles. They didn't abandon crime. They just upgraded their business model to match the times. They realized that to make real money, they didn't need to be the enemy of the corporation. They needed to become its shadow partner. Stick with me here, because this is where the lines between criminal and capitalist start to blur in a way that might make you uncomfortable. The Yakuza stopped breaking windows and started buying stock. They understood something fundamental about the corporate world that even some MBAs miss. Money loves silence, and reputation is the most fragile asset a company owns. This new breed, the economic Yakuza, operated on a chillingly simple philosophy. They didn't want to destroy the host. They wanted to be the parasite that the host feeds willingly. They infiltrated the very architecture of the Japanese financial system, not by robbing banks, but by becoming the people the banks did business with. They exploited the gray areas of regulation and the desperate desire of Japanese executives to save face at all costs. What you are about to discover isn't just a story about bad guys doing bad things. It is a masterclass in the architecture of corruption. It's about how the underworld identified the weaknesses in the white-collar world, the greed, the pride, the fear of scandal, and monetized them on an industrial scale. We are talking about a merger of crime and finance so seamless that, for a long time, you couldn't tell where the boardroom ended and the gang headquarters began. But to pull off a heist of this magnitude, to hold entire corporations hostage without firing a single shot, they needed a specific tool. They needed a mechanism that could turn a simple shareholder meeting into a theater of terror. And they found it in a uniquely Japanese phenomenon that would bring the country's corporate elite to its knees. So, how exactly did they force the most powerful CEOs in the world to open their checkbooks and pay millions in silence money? The answer lies in a strategy so devious, yet so legal, that it redefined the concept of blackmail. Before we unlock the specific mechanics of this strategy, a tactic that terrified boardrooms more than any physical threat ever could, I want to take a brief moment to acknowledge the weight of what we are uncovering here. We are peeling back layers of history that usually stay buried in the fine print. It makes you wonder how much of the global economy is actually built on these handshake deals in the dark, doesn't it? If this kind of deep dive into the hidden machinery of money and power resonates with you, I need to ask for your support. These aren't the stories the algorithm usually pushes, and frankly, they take a lot of digging to put together. If you believe this content matters, if you want to keep exploring the history they don't teach you in business school, please go ahead and hit that like button. It's a small gesture, but it signals to YouTube that this community values substance over hype. And if you haven't already, make sure to subscribe and turn on notifications. Your participation is truly what makes this channel grow and allows us to reach more people who are hungry for the truth. I'm also genuinely curious about your take on this. Do you think the line between legitimate high finance and organized crime is still this blurry today? Or was this just a product of the 80s? Leave a comment below with your thoughts or just say, "I'm in," if you're ready for the rest of the story. I read the comments because this is a conversation, not a lecture, and your insights help shape where we go next. Now, with that said, let's return to that devious tool I mentioned. The Yakuza needed a way to monetize fear legally, and they found their answer in a group of men who wore the best suits, spoke the most polite Japanese, and held the power to destroy a CEO's career with a single question. They were called the Sokaiya. The word you need to commit to memory right now is Sokaiya. If you translate it literally, it sounds harmless enough. Something like general meeting men. It sounds bureaucratic, boring even. But in the neon-lit underbelly of the Japanese economic miracle, the Sokaiya were the architects of a very specific kind of terror. They were the bridge between the violent street codes of the Yakuza and the polished mahogany tables of the boardroom. To understand their power, you have to understand the flaw they exploited. They didn't exploit security systems or bank vaults. They exploited a cultural vulnerability. In the West, if a CEO gets grilled by an angry shareholder during an annual meeting, it's just another Tuesday. It's part of the job. But in Japan, especially during the boom years, the corporate culture was built entirely on harmony. The supreme directive was to maintain appearances, to keep the surface calm, even if the waters underneath were churning with corruption. Public humiliation was, and in many ways still is, considered a fate worse than bankruptcy. To lose face in front of your peers, your employees, and the public was the ultimate nightmare for a Japanese executive. The Sokaiya knew this. They understood the mindset of the corporate elite better than the executives understood themselves. Here is how the mechanism worked, and it is brilliantly simple. A Sokaiya group didn't need to buy a controlling stake in a company to hold it hostage. They didn't need millions of dollars in seed capital. All they needed was the minimum unit of ownership, sometimes just a single share. That one share was their golden ticket. It gave them the legal right to walk through the front doors of the annual general meeting, sit in the auditorium and raise their hand. But they didn't come to ask about profit margins or dividend yields. Before the meeting, these groups would spend months conducting a hidden truth investigation. They would dig into the private lives of the directors. They looked for the dirt that everyone has but no one talks about. Secret mistresses, hidden gambling debts, an illegitimate child, a misuse of company funds for a personal vacation. They gathered this dust, as they called it, and put it in a file. Then, they would approach the company management quietly, days before the big meeting. The message was implicit, but crystal clear. We can have a nice, short, quiet meeting where everyone claps and goes home early. or we can stand up in front of the cameras and the other shareholders and read this file out loud. It was a shakedown, pure and simple, but it was executed with the precision of a legal maneuver. The corporations, terrified of the impact such a scandal would have on their stock price and their reputation, opened their wallets. But they couldn't just hand over a bag of cash. That would be illegal. So, they created a complex system of payoffs disguised as legitimate business expenses. This is where the behind-the-scenes creativity is almost impressive. Companies would subscribe to dozens of copies of obscure economic journals published by the Sokaiya, magazines that were barely readable and cost thousands of dollars per issue. They paid exorbitant consulting fees for advice they never needed. They sponsored educational seminars run by the clans. It was a massive transfer of wealth from the legitimate economy to the underworld, all listed on the balance sheets as operating expenses. Now I want to go even deeper into this subject, because the relationship wasn't just about extortion, it was about transformation. Over time, the Sokaiya evolved from being pests to being essential service providers. This is the part that really twists the knife. The corporations started to rely on them. You see, the Sokaiya offered a premium service for their clients. If a company paid the fee, the Sokaiya wouldn't just stay quiet. They would actively protect the management from other people. Imagine the scene. The annual general meeting is packed. The CEO is nervous because profits are down, and there are regular legitimate shareholders who are angry and want to ask tough questions about the company's decisions. But the moment a regular shareholder stands up to complain, a group of terrifying men in the front row, the Sokaiya on the payroll, stand up and scream him down. They yell "no objection" or "move on." They intimidate the honest investors into silence, ensuring the meeting ends in record time. In the 1980s, some of the biggest companies in Japan, giants like Nomura Securities and Dai-ichi Kangyo Bank, had shareholder meetings that lasted less than 20 minutes. Why? Because the Yakuza were running the floor, ensuring total harmony through total intimidation. This journey into the dark heart of the meeting room reveals a startling reality. The crime syndicates became the unofficial security guards of the corporate elite. It was a symbiotic relationship. The executives got to keep their jobs and their dignity without ever facing scrutiny. The Yakuza got a steady stream of corporate revenue that washed their money and gave them a veneer of legitimacy. They weren't just gangsters anymore. They were stakeholders. They were part of the establishment. This dynamic completely warped the concept of capitalism in Japan. In Wall Street, information is the most valuable commodity. Traders pay millions to know something others don't. But in Tokyo, during this era, the most expensive commodity was silence. The entire system was rigged to suppress information, to hide the bad debts, the poor management, and the internal rot. The revelations of how deep this went only came out much later, but for decades, this was the standard operating procedure. It created a financial environment where risk was hidden, not managed. And as this model proved successful, the Yakuza got greedier. They realized that if they could control the boardroom with fear, they could also influence the stock price. They started to look beyond the annual fees. They looked at the massive amounts of capital these banks and real estate firms were sitting on, and they thought, why settle for a consulting fee when we can get a loan that we never have to pay back? This shift in mentality paved the way for one of the biggest economic bubbles in history, setting the stage for a disaster that would bring the entire country to its knees. Drop a comment below with the phrase, "Silence is expensive," if you are following the logic of this scheme. I want to see how many of you are tracking this. To really grasp the magnitude of this, we have to step into a time machine and travel back to the neon-soaked streets of Tokyo in the late 1980s. This wasn't just an economic boom, it was a collective hallucination. The atmosphere was electric with a kind of greed that makes the Wolf of Wall Street look like a calm Sunday school picnic. To give you a concrete sense of the madness, there is one statistic that historians and economists still cite with disbelief. At the height of the bubble, the land beneath the Imperial Palace in central Tokyo, just that one plot of land, was estimated to be worth more than the entire state of California. Think about that. 1 square mile of dirt in Japan was valued higher than the coastline, the cities, the farmland, and the tech industry of the richest state in America combined. In this environment, money lost its meaning. It became just numbers on a screen, spiraling upward into infinity. And this is where the banks found themselves in a very expensive trap. You might assume that having too much money is a good problem to have, but for a bank, unlent cash is a liability. It's dead weight. The Japanese banks were drowning in liquidity. They had vaults full of cash that they needed to lend out to generate interest, to keep the journey of growth moving forward. However, there was a catch. The Ministry of Finance still had strict old-school regulations on the books. They limited how much risk the banks could take and who they could lend to directly. So, the bankers faced a dilemma. They had aggressive quotas to meet, massive bonuses on the line, and an ocean of cash to deploy, but their hands were tied by red tape. They needed a way to bypass the rules. They needed borrowers who were willing to take massive risks, people who could move fast and didn't ask questions about interest rates. They needed an intermediary to do the dirty work. And who was standing there, ready with open arms and a new set of business cards? The Yakuza. This is the moment where the transformation of the Japanese economy truly turned dark. The Yakuza provided the banks with the perfect solution. They created a labyrinth of shell companies, hundreds of them. On paper, these weren't criminal organizations. They were legitimate real estate developers, resort planners, and investment firms. The favorite vehicle for this scheme was the golf course. In the 80s, golf club memberships in Japan were traded like stocks, sometimes costing millions of dollars. The Yakuza would propose a golf course project in the middle of nowhere, inflate the value of the land by 500%, and ask for a loan to develop it. Now, you might think the banks were tricked. You might think these poor innocent bankers were hoodwinked by sophisticated con artists, but the hidden truth is far more disturbing. The banks knew. The branch managers knew exactly who they were dealing with. They knew that the president of the development company had missing fingers and a tattoo bodysuit under his shirt. But they didn't care. In fact, they welcomed it. These ghost loans were the engine keeping the bank's profitability soaring. The bankers operated on a policy of willful blindness. As long as the paperwork looked clean and the collateral, usually that hyperinflated land, was listed, the loans were approved. It was a symbiotic corruption. The banks got to lend out their excess cash at high rates, and the Yakuza got billions of dollars in capital to play with. Now I want to go even deeper into this subject, because we need to talk about the Jusen. If you study the architecture of corruption in Japan, all roads eventually lead to the Jusen companies. These were specialized housing loan corporations, originally designed to help regular people buy homes. But during the bubble, they went rogue. As the major banks came under slightly more scrutiny, they started funneling their riskiest loans through the Jusen. These companies became the trash cans for bad debt and the primary pipeline to the mob. They lent aggressively to Yakuza front companies with almost zero due diligence. It was a massive shell game, moving money from the public deposits, through the big banks, into the Jusen, and finally into the pockets of crime bosses. This wasn't just a few bad apples. It was systemic. The mindset across the entire financial sector was that land prices would never go down. They truly believed the party would never end. This belief justified the most insane decisions. We are talking about loans where the collateral was worth maybe 10% of the loan value, but everyone winked and nodded because next year it will double in value anyway. The Yakuza used this money to buy art, to speculate in stocks, and to fund their global expansion. They were no longer just running protection rackets. They were running hedge funds fueled by bank loans they had absolutely no intention of ever repaying. The impact of this cannot be overstated. By intertwining themselves with the banking system, the Yakuza made themselves too big to fail. If the banks called in the loans, the Yakuza would default. The collateral would be exposed as worthless dirt, and the bank would collapse. The criminals essentially took the banking system hostage, not with guns, but with debt. It was a stalemate. The banks had to keep lending them money just to pay the interest on the old loans, creating a zombie economy that looked alive on the surface, but was dead and rotting on the inside. This brings us to the revelations that happen behind closed doors. Imagine the board meetings at these major financial institutions. They weren't discussing how to stop the bleeding. They were discussing how to hide it. They were cooking the books to cover up the fact that a significant percentage of their loan portfolio was held by the mafia. It was a house of cards built on a foundation of silence and complicity. But the Yakuza didn't just sit on this cash. They were active. They used this unlimited line of credit to manipulate the market in real time. They developed a specific technique to artificially inflate asset prices, a method so aggressive that it literally translates to land sharking. This moves us away from the passive receipt of loans into active, violent market manipulation. They needed to ensure the value of their collateral kept rising, so they went to war with the market itself. Drop a comment below with the phrase, "The bubble is real," if you can see parallels between this story and other financial crises you've heard about. It's scary how history rhymes, isn't it? The term you need to understand now is jiage. In the lexicon of Japanese organized crime, this word carries a weight that is both heavy and terrifying. It translates roughly to land raising or land sharking. If the banks provided the fuel for the fire with their ghost loans, the Yakuza, the specialists who practiced this dark art, were the ones pouring gasoline directly onto the flames. This is where the white-collar pretense falls away slightly, revealing the violent machinery operating behind the scenes. In the chaotic expansion of the bubble era, developers were desperate to build massive skyscrapers, golf courses, and luxury condos. But there was a problem. Tokyo is an ancient city, a patchwork of tiny plots of land owned by families for generations. To build a modern high-rise, you needed to consolidate 10, 20, or 30 of these small plots into one massive footprint. If just one grandmother refused to sell her tiny wooden house, the whole billion-dollar project would stall. A legitimate developer might try to negotiate for months. The Yakuza, however, had a different mindset. The Jiagiya were brought in to clear the land. Their methods were a psychological transformation of the neighborhood. They wouldn't start with violence. They started with nuisance. They might park a dump truck right in front of the stubborn homeowner's front door and leave it there for weeks. They would play heavy metal music at deafening volumes at 3 a.m. every single night. They would throw dead animals into the garden or smear waste on the walls. If the homeowner still refused to make the decision to sell, the tactics escalated. Mysterious fires would break out. Trucks would accidentally reverse into living rooms. The message was brutal. Sell us your land for a fraction of what it's worth, or we will make your life unlivable. Once the Yakuza consolidated the land, they would flip it to the desperate developers for astronomical sums. This was flipping houses at gunpoint. Now I want to go even deeper into this subject. Because while the land sharking was brutal, what they did in the stock market was intellectually devious. The Yakuza applied the same principles of intimidation and manipulation to the Tokyo Stock Exchange. They didn't just want to participate in the market, they wanted to rig it. This is where the story shifts from physical violence to the architecture of corruption within the financial system itself. The Yakuza formed what were essentially ramp groups. They would identify a small to mid-sized company with low trading volume, a stock that was easy to push around. They would start buying up shares quietly, cornering the market. Once they held a significant chunk, the impact of their strategy would kick in. They would unleash a torrent of rumors. In the pre-internet age, information traveled through newsletters, phone calls, and the whispers of salesmen. The Yakuza would spread stories that this boring little company was about to be acquired by a giant, or that they had discovered a revolutionary new technology. But rumors alone weren't enough. They needed the big boys to validate the lie, and this is the most shocking revelation of the entire era: the complicity of the big four brokerage houses. We are talking about the pillars of the Japanese economy, firms like Nomura and Yamaichi. These weren't back-alley betting shops, they were the Goldman Sachs and Morgan Stanleys of Japan. The Yakuza, now masquerading as VIP investment groups, were some of the biggest clients these brokerages had. They generated massive commissions. So, when the Yakuza wanted a stock price to go up, they pressured the brokerages to make it happen. The brokerages would instruct their armies of salesmen to push that specific stock to the general public. Imagine thousands of sales calls going out to retirees, housewives, and salarymen across Japan. You have to buy this stock now. It's going to the moon. Our top analysts recommend it. The retail investors, trusting the authority of the Big Four, poured their savings in. This wave of buying caused the price to skyrocket. It was a self-fulfilling prophecy manufactured by crime and sold by legitimate corporations. Once the price hit the peak, the Yakuza would dump their shares. They would sell everything at the top, making billions in profit. The stock price would then collapse, returning to its true value. The Yakuza walked away with fortunes. The brokers got their commissions. And the regular people, the teachers, the factory workers, the families, were left holding worthless paper. Their journey into the market ended in ruin. But the corruption went even deeper. In a fair market, everyone takes risks. If you make a bad bet, you lose money. That's the rule. But the Yakuza changed the rules. They demanded a guarantee that no other investor got: loss compensation. In the dark boardrooms of the Big Four, there was an unwritten agreement. If the Yakuza's stock picks went down, if they actually lost money on a trade, the brokerage firm would cover the loss. Yes, you heard that right. The securities companies used their own capital or shifted profits from other accounts to reimburse the mob for their bad bets. They called this tabashi, literally making it fly away. They made the losses fly away from the gangsters' accounts and land on the books of the company, or indirectly on the regular investors. Why would the most powerful financial institutions in the world do this? Fear and greed. They feared the Sokaiya tactics we talked about earlier, the threat of scandal. But they also were greedy for the massive volume of trading the Yakuza provided. They treated the mob as super VIPs, creating a two-tiered system where the average citizen played by the rules of capitalism, while the criminals played with a safety net provided by the banks. The truth hidden from the public was that the entire market was rigged to ensure the predators never went hungry. This betrayal of the public trust is difficult to comprehend today. It wasn't just negligence, it was an active partnership. The brokerage houses were essentially laundering the volatility of the market, ensuring that the Yakuza only experienced the upside. This massive accumulation of bad debt and hidden losses was ticking like a time bomb inside the vaults of the Big Four, waiting for the moment when the music would finally stop. Drop a comment below with the phrase, rigged system, if you are shocked that major banks and brokerages were covering the losses of the mafia, while regular people lost everything. I want to see how many of you think this still happens today. It was the hangover from hell, the kind that doesn't just ruin your morning, but destroys an entire generation. On the first trading day of 1990, the Tokyo Stock Exchange didn't just stumble, it began a descent into the abyss. The Nikkei index, which had been the envy of the world, lost nearly half its value in less than a year. The spell was broken. The collective hallucination that Japanese land prices could only go up was shattered by the cold, hard gravity of economics. But unlike a normal recession, where businesses fail and recover, Japan was about to enter a nightmare scenario because of who held the money. When the bubble burst, the value of the collateral backing those trillions in loans evaporated. A golf course development that was valued at $100 million was suddenly worth $10 million. If that. In a normal economy, the bank seizes the asset, sells it, takes the loss, and moves on. But this wasn't a normal economy. This was the Yakuza recession. Imagine being a bank manager in 1991. You have a loan on your books for $50 million overdue. You look at the file. The borrower is a shell company connected to the Yamaguchi Gumi, the largest crime syndicate in the country. You have two choices. Choice A, you call the borrower and demand repayment. But how exactly do you collect a debt from a man who cuts off fingers for a living? How do you evict a gang that has literally set up their headquarters on the property you financed? You don't. Choice B, you seize the collateral. But the collateral is now worthless dirt, and if you seize it, you have to admit to the government regulators that you lent money to the mob and that your bank is technically insolvent. So, the bankers made a fatal decision. They chose choice C, do nothing. They pretended the loans were still good. They lent the Yakuza more money just so the gangsters could pay the interest on the old loans. It was a pretend and extend strategy. This created a massive rotting pile of bad loans, non-performing loans, that sat in the belly of the Japanese financial system like a tumor. We aren't talking about small change. Estimates suggest that bad loans totaled close to $1 trillion. A significant portion of this was tied directly to organized crime. This is what caused the lost decade. The banks were zombies, walking dead. They couldn't lend to legitimate businesses, to new startups, or to families because all their capital was tied up supporting the dead weight of the Yakuza's bad debts. The entire engine of the Japanese economy seized up because the hidden truth was too terrifying to admit. Now I want to go even deeper into this subject. Because the cover-up couldn't last forever. The tension between the reality of the rot and the surface-level lies eventually snapped. And when it did, it took down giants. The most dramatic, heart-wrenching example of this collapse happened in November 1997. It was a moment that shook the global financial mindset to its core. The name was Yamaichi Securities. They were one of the Big Four, a titan of the industry, a company with a 100-year history that seemed as permanent as Mount Fuji. But behind the scenes, Yamaichi was hollow. For years, they had been engaging in massive tabashi schemes. Tabashi literally means to make fly away. When their VIP clients, often corporate racketeers and Yakuza-connected speculators, lost money, Yamaichi didn't let them take the hit. They moved those losses off the client's books and hid them in secret, offshore accounts, effectively flying the debt away to where regulators couldn't see it. They did this to maintain their relationships with the underworld and to avoid the Sokaiya exposing their secrets. They were paying blackmail money on an industrial scale, not just in cash, but by absorbing the market losses of the criminals. But as the market kept falling throughout the 90s, the hole got too deep to hide. The losses were in the billions. The revelations finally came out when credit rating agencies downgraded them, and the liquidity dried up. On November 24, 1997, the president of Yamaichi, Shohei Nozawa, stood in front of a packed press conference. The cameras were flashing blindingly. He announced that the 100-year-old firm was filing for bankruptcy. It was the largest business failure in Japanese history at the time. And then, something happened that you almost never see in the stoic world of Japanese business. He broke down. He started sobbing uncontrollably, bowing deeply, begging the world not to blame his employees. "The employees are bad," he cried. "It is only we, the management, who are bad." It was a visceral, tragic moment. But the impact of those tears was the realization that the Japanese way, the system of harmony, handshake deals, and backroom cover-ups, had failed. The journey from the dizzying heights of the bubble to the humiliating bankruptcy of Yamaichi was a direct result of allowing crime to merge with finance. The giant didn't fall because of a bad quarter. It fell because it had allowed the parasites to feed on it for too long, until there was nothing left but a shell. The collapse of Yamaichi was the final proof that the transformation of the Yakuza into economic partners was a death sentence for the host. The devastation wasn't just on Wall Street or in the Marunouchi district. It trickled down. Thousands of employees lost their jobs overnight. Pension funds vanished. The trust in the financial system was obliterated. The average Japanese citizen looked at the news and realized that the institutions they trusted with their life savings had been playing a dangerous game with the mafia, and they had lost. The decisions made in secret meetings with gangsters had destroyed the livelihoods of honest people. Drop a comment below with the phrase "too big to fail" if you think this story serves as a warning for modern banking systems. I want to know if you believe we've actually learned this lesson or if we're just repeating it. It would be comforting to tell you that after the spectacular collapse of Yamaichi Securities and the subsequent crackdown by the Japanese government, the story ended there. It would be a nice, tidy conclusion to say that the authorities woke up, realized the error of their ways, and purged the system of its criminal elements. The laws did change, that much is true. In the early 2000s, Japan passed the Yakuza exclusion ordinances. These laws were strict. They made it illegal for any business to knowingly transact with a syndicate member. If you are a known Yakuza today, you cannot open a bank account, you cannot sign a lease for an apartment, you cannot even buy a cell phone plan in your own name. On the surface, it looks like society has finally squeezed them out. But if you believe that the Yakuza simply packed up their bags and retired, you are underestimating the adaptability of the criminal mindset. The reality is far more complex and in many ways, more dangerous. The Yakuza didn't disappear. They underwent a radical transformation. They looked at the new laws not as a death sentence, but as a market constraint that required innovation. Just as they swapped swords for suits in the 1980s, in the 21st century, they swapped their physical presence for digital invisibility. The modern Yakuza doesn't need to sit in a boardroom to control a company. They operate in the shadows of private equity, hiding behind layers of shell companies registered in tax havens like the Cayman Islands or Singapore. Today, the new breed of gangster is indistinguishable from a legitimate hedge fund manager. They are multilingual, they hold MBAs from top universities, and they understand the intricacies of global finance better than the regulators do. They have moved into the gray zones of the economy. We are seeing their footprints in the volatile world of cryptocurrency, where large sums of money can be moved across borders in seconds without the oversight of traditional banks. They are involved in pump and dump schemes in the penny stock markets of other Asian countries. They are the silent investors behind legitimate tech startups, labor dispatch services, and even nuclear waste cleanup projects. The truth hidden behind the corporate veil is that their capital is still circulating in the veins of the global economy. It has just been laundered so thoroughly that it appears clean. Now I want to go even deeper into this subject, because the survival of the Yakuza teaches us a profound lesson about the nature of capitalism itself. This is the part of the story that most financial textbooks are afraid to touch. The standard narrative is that crime is an anomaly, a virus that infects the healthy body of the free market. We are taught that the market is rational and moral, and that crime is an external, irrational force. But the Japanese experience forces us to confront a much more uncomfortable revelation. Organized crime is not an anomaly. It is often a feature of the system. Think about the decisions made by those bankers in the 80s. They weren't coerced into working with the mob every single time. Often, they sought the mob out. Why? Because the Yakuza offered a service that the legitimate market demanded but couldn't legally provide. The system demanded infinite growth. The system demanded that land prices be cleared for development. The system demanded that difficult shareholders be silenced. The Yakuza were simply the service providers who fulfilled the dirty needs of the clean economy. They were the grease in the gears of the Japanese economic miracle. This forces us to look at the architecture of corruption, not as a Japanese problem, but as a structural flaw in high finance globally. When the pressure to generate profit becomes the only metric that matters, the moral compass breaks. Whether it's the Sokaiya clearing land in Tokyo, or subprime mortgage lenders in New York, or money launderers in London, the dynamic is the same. The financial system creates a vacuum for high-risk, high-reward behavior, and organized crime rushes in to fill that vacuum. The banks use the criminals to accelerate profits, assuming they can control the beast. But as we saw with the bubble, the beast eventually grows too big to be controlled. The impact of this realization is heavy. It suggests that as long as we prioritize profit above all else, there will always be a shadow banker waiting in the wings. The Yakuza proved that the boundary between a legitimate businessman and a criminal mastermind is incredibly porous. In the 80s, the only difference between the CEO of a major security firm and a Yakuza boss was that one operated in the daylight and the other in the dark. But they both played the same game, rigged the same markets, and destroyed the same lives when it all came crashing down. This brings us to a chilling reflection on the modern world. When you look at the complex financial instruments we use today, the derivatives, the high-frequency trading algorithms, the opaque offshore accounts, you have to ask yourself, who is really pulling the strings? The journey we have taken through the history of the Yakuza shows us that money has no smell, and it has no conscience. It flows to where the power is. And sometimes, the people holding the power are wearing very expensive suits, sitting in glass towers, but operating with the exact same predatory logic as a street thug. The legacy of the Yakuza's Wall Street playbook isn't just a history lesson. It's a mirror. It challenges us to look at our own financial institutions and ask, are we building a system based on value and integrity, or are we just constructing a more sophisticated version of the Sokaiya racket, where the powerful silence the weak and the game is rigged before the opening bell even rings? The bastidores backstage of the financial world are rarely as clean as the front stage suggests. The actors may have changed, the technology has certainly advanced, but the script? The script remains suspiciously similar. This story is far from over, because the human greed that drives it is timeless. We have dissected the past, but the echoes of these events are vibrating through the economy right now. There is one final piece of this puzzle that connects everything we've discussed to the very wallet in your pocket today. Drop a comment below with the word blurry if you think the line between legal banking and criminal activity is harder to see than ever before. I want to know if you see the world differently now. We've covered a lot of ground today, and honestly, stories like this remind us why it's so important to look beyond the headlines. If you value this kind of content, where we don't just skim the surface but actually dig into the mechanics of power, Giving the video a like is a simple, meaningful way to support the work we do here. And if you want to make sure you don't miss the next chapter of these financial deep dives, just hit that subscribe button. We are building a community of people here who actually want to understand the machinery behind the money, and you are welcome to be a part of it. I also want to see who stuck with me through the whole story. If you're still here, drop the comment. I see the pattern. It's a small signal to me that you're serious about understanding how the world really works. Now, the story of corruption doesn't stop in Tokyo. There is another video on the screen right now that perfectly complements what we just talked about. Click right there, and let's continue this investigation together.